Generally speaking, there's actually a lot of problem when it comes to time frame, especially for the beginners. When you are starting, you are asking yourself, which time frame should I use? You are struggling with 1 minute time frame, 1 hour time frame. Sometimes you hear people who are profitable, maybe they're profitable by just trading highest time frames over there, and actually it is overwhelming over there. So in this video, we're just going to be talking the perfect time frame that you have to be using over there. If you're a beginner, if you're someone who actually has just been trading in the forex market, you don't have to worry about that. My name is Dan. I'll just be taking you through this class. All you just have to do is to watch this video until the end. And this is your first time to be over here, always consider to subscribe down one over there. And if always you have any question, make sure that you leave it in the comment section. I'll just be checking that one. Don't forget even to like this video. So let's start this video right after the intro of this video. Hello and welcome back. Now let's start over here by explaining what are these time frames and what is it, how you can just change it on the chart anytime maybe you just want to trend right over there. It's just very simple, but let's just explain it. Let's just like this. Now when you just go to your chart right over here, if you're using the candlesticks patterns right over here, this is how you just how the time frames affect the market. And sometimes it's just confusing to many. The reason being, the moment, for example, this is a 4-hour time frame. If you just go to the lowest time frame, it's just going to change. And some people don't know why it's actually changing. This is what I want to explain before we just go to the main point that I'm just going to talk about in this video right over here. Now, as you can see, I just want to see something that I've written over here, the trend lines right over here. So if I go to 1 minute time frame, you see that everything has actually changed and the market is actually going to appear differently over here, and the candlesticks are just going to change. Everything, the market is just going to change in that case. So if we just press maybe to 1 day time frame over here, you see again the candlesticks and everything actually changes right over here. Why do we see these changes? Why do we see the changes? That is what I'm just going to explain in this video. Now you can see over here I've changed. We have these time frames from 1 minute up to 12 months time frames over here. Let me just explain how they affect the chart right over here. Now as you can see right over here, now this candlestick over here, so this is what we call the candlestick over here. You can see this is red end one, this is one, this one, this one, this one, this one, this one, this one. So if you select 1 day right over here, it means after these candlesticks finish 24 hours, it will actually close. And then after 24 hours, then this again opens over here, the one that is actually drawing green over here, which means after sometimes now from now, this candlestick actually is going to close after 24 hours, and then it's actually another candlestick is going to be opened right over here. So that is what means by the candlesticks right over here. Now if you want to let me just go to 4-hour time frame over here, and we have 1 week weekly over here candlesticks, and that means this is the candle that has been formed this week. After this week ending 7 days, then another candlesticks will just be opening over here, and actually we'll just be seeing direction right over here. Now when you want to see the formation all these candlesticks that contribute to this bigger one over here, you can actually count from this day. So you can count 1 2 3 4 5 6 7. So and all this one from right over here, 1 2 3 4 5 6 7 is the one that contribute to the candlestick that we have seen previously right over there. So this is then if you just go small bit by bit over here, like this is 4-hour time frame, every candlestick is just moved by 4 hours. So after 4 hours, these candlesticks will close and another one will open. So the more you just go with this, the more you actually see the movement of the candlesticks over here. Now it's just easy like that. Even if you just go to 3 minutes, you just go to 1 minute, there's some of them that accept actually. You can see even seconds like these. Let me show you for the second one. Okay, you have to pay for that option. So 30 seconds, you have to pay for that but you can see after every minute right over here, the one I've showed you over here, the candle is actually going to be formed right over here. So it means this one closes. Just look at that. The one that is just going to form over here is just going to close, and another one is actually going to open right over here. Okay, this is just a definition to help the beginners to differentiate of what I'm just going to be talking about over here, so that they can just understand. So you can see that is candlesticks. You can see actually it moves over here, but when you just go to 1 weekly candlesticks over here, it actually takes a long time maybe to see the movement, because it's actually a long time right over here. Now I want to see all these candlesticks closing, and you can see it's just going to open another candlestick over here. Let's see. After that closes, after 1 minute elapsed, then we're just going to be seeing another candlesticks being formed right over here. It's just very simple. I just want to see this, hurry over here for the beginner, so that they can just see all those things. So regardless of where the time will elapse, that is where it closes. You can see it just closed, and another one has just been opened over here. So after 1 minute over here, another one will just be opened over here. So after all those formation of those candlesticks moving up and down, that is actually what forms the chart. That is what forms the chart. And what you see is that the moment you use the highest time frame and the lowest time frames, you're just going to see the chart actually appearing different because of the volatility, because of the formations and all that. So if you just go to 1 day time frame, you'll not see all these candlesticks being formed over here, or even 1 hour. You just see maybe 1 candlesticks over here representing almost all these candlesticks right over here, because this is 1 2 3 4. You just count 60 candlesticks over here. That is the one that can fit to 1 hour time frame right over here, which means this is going to be formed, and another one, and another one, and another one right over there. So that's how the candlesticks actually form in the market. You just have to know that one. Now, which time frame are you supposed to do using over here? So this seems to be very volatile sometimes, and over here it just seems to be volatile, and sometimes the strategy cannot even work on this because there are less amount of people who actually are concentrating on these lower time frames right over here. So regardless of which, whether you are using you are patient enough to the market, or if you are not a person who actually waits in the market, whether you're a long time or short time trader, this is what you have to be checking right over here. At least to begin with the 4 hour time frame, one design time frame to actually forecast, to know where the market will actually be ending next. It will just be helping you so much, something just like that. For example, I can just come over here to the 4 hour time frames over here, and then I can just know whether I can just try to draw my things over here, and then I can just know if this market is actually coming all this way, just start my trend lines over here, then I can know the market is actually ending upward. And you can see this 4 hour time frame, but if you go to 1 minute time frame, you're just going to see a lot of noise. So highest time frame actually helps us to reduce the noises in the market, and those noise may not be meaning anything. So highest time frame, sometimes they are very important. Like over here, even if I'm a scalper, I have to use highest time frame for sometimes, and then I can actually go to 1 hour time frame. I'm talking about people who are not patient anymore, but for the people, if you are patient enough, you understand that you can use even from 1 day, 2 weeks, and actually the money that you're going to be using over here has to be very high. Okay, so all those time frames that you just use over here are very important, and correspond to even the capital that you actually use right over here. For example, what I'm talking about over here, let me show you something. If I just go to 4 hour time frame, or let me just go to 1 day time frame, so that I can just show you the amount of capital that is actually needed right over here. If I just go to weekly market analysis over here, you will see the movement maybe that I may be observing in the market. I may see this. The market is just going to end maybe this way. It's just going to move from here to here. That seems to be a short distance, but in real sense, this is a very big move from 19. That is from where the market is sitting now at 1930, and the market you are aiming at 2070. That is a very long distance right over here. But when you use a very, so it means here you just need a capital. That is, first of all, you just need a very huge amount of capital right over here. And the other thing that you just be needing over here is what we call patience. Patience is actually needed over here before the market actually maybe hit your TP or loss. Is just going to take some time, and all you just have to be using again over here is to use something like very small lot size over here, because you're going to be giving your market a very long distance. So for example, there's someone who is put this the stop loss maybe at 1816, and now the market is sitting at 1930. So that is a very long distance right over here, which means you have to use a very small lot size. You have to be patient enough, and you have to have a good capital right over here. So those are the things that you have to be observing in the market anytime you are trading. So if your capital is small, all those things you may consider now to leave this area, but you can be checking where the market will just be ending. That is for everyone. You can just know the direction, the future of the market. That is very important over here. How maybe you're just standing the concept I'm just bringing over here, because there's no specific time frame that you have to use right over here. It's just a combination to know the advantage of using this and the disadvantage of using that one. Now, the lowest time frame I may recommend for scalpers and everyone who is actually trading right over here is actually, there's a small time frame over here, which is 1 hour time frame right over here. And the reason because of this is 1 hour time frame is because it's just going to be reducing a lot of noise that you may experience maybe when you are using 30-minute time frames right over here. Okay, so in 1 hour time frame you may see a lot of traders trading there, and you can see, for example, it's actually showing something very important over here. This is gold, and you can see the trend lines. Maybe it's just going to bring them out, and you can see just amazing right over here. It's not so fast, it's not so slow, so it's actually even in between the way you just trend. So it means after 24 hours you're going to see more than 24 candlesticks being formed if you use 1 hour time frame, which actually can just give you the direction where the market is actually going to be heading right over there. Small hour time frame like 3 minutes, I'm going to have a lot of noise, because we are going to have market going up and down, and sometimes can even confuse you when it comes to that, because you can see something like this is just going to show you like the market is going up and really going down, up. So it's just going to be confusing you a lot over there. So, but for some people who actually may be having a lot of small amount of capital, let me just show you something right over here. The highest time frame. This way, actually, you can use the if you have a small amount of money, you can consider to trade on 1 hour time frame. But when it comes to entry, if you have a position that you actually want to enter a position just like this, then you have to lower your time frame maybe to 5 to 3 minutes to 10 minutes. Although that is, you can only use just something like that to just enter into the market. Let's see something just like that over here. So if you want to trade the market to come right from here to here, you can see the market is actually sitting now at 1933, and actually this is a very short distance right here. These are very short distance over here. That's a very short distance you can see from, and it's just look like a very big distance over here, but it's just very small. The other thing is you have to understand about trending over here is actually your TP can be hit very fast, and your SL, that is stop loss, can just be hit very fast. So when it comes to highest time frames, lower time frames, we have disadvantage and advantages right over here. So you can see, because the market is having a lot of noise over here, the market can hit your TP very fast and hit your SL very fast. So sometimes maybe try to use 1 hour time frame. use this one to enter. For example, if the market has moved to this position, let me show you. Let me just go to the last one. For example, assume now I wanted to trend these trend lines over here. I wanted to trend these trend lines right over here, and I assume my entry point will be around this region over here. Okay, because now I don't know where to enter exactly. That is why I do my lifetime, my time frame to even 3 minutes to see the formation. And when you come to this, you observe one thing that will be formed right over here, and that thing is that the market is actually down, and you are very right to enter into the market. You can see this and this and that. So the market is actually low, so you can actually try to enter at that position. So that's how the lowest time frame can actually enter. So anytime maybe you're using highest time frame, when it comes to entry, you'll be considering to enter to check on the lowest, the previous, the lower one that is below the time frame that you have just been using. I know I don't have a specific time frame that I'm just been giving you over here, but that is what you check on the market anytime you are confused on where you to enter using the time frames right over here. So if you are trader right over there, just consider the point I've just highlighted over here. And actually, if it's just confused you, make sure that you repeat the video again and again. You understand the concept I'm actually trying to bring out. But there's no specific time frame that you can just use over here, but it will just matters between whether your capital, the patience that you have, the skills that you have, the lot size that you just use. All those things are very important when it comes to whatever we are talking about right over here. If you love this video, make sure that you support me over here by subscribing. Leave the comment down over there in the description. If you want to contact me for anything, classes and all that, my number is in the description below. You can just WhatsApp me over there. Also, there's something over here written thanks. You can just throw your gift right over there. All of them are just appreciated over there. Follow me everywhere at that deck. I'll see you next time. Adios.